Tuesday, July 8th, market analysis. Stan Ehrlich, good morning, 9:48 California time. And I've decided that I'm going to start these recordings shortly after the close, which would be shortly after 1 o'clock California time, starting next Monday. So this is the first day of this announcement, so I'll do it again, of course, Wednesday, Thursday, and Friday of this week. But that way, I'll have the complete day of trading that I can talk about. Reversals, they're all finished. I have other obligations that require me to pay attention to the markets during market hours. So I'll just do this YouTube, somewhere between 1 and 2 o'clock, put it that way. California time. I know that's a little late for you people on the East Coast. Sorry. So that's what I'm going to change to. Same charts, same material, just you'll see a full day of trading for most symbols. Now, the E-mini, we always start out with the indexes, go to futures contracts and go to some stocks. And sometimes I go to other things like cycles, seasonals, same thing. Psychology of trading, maybe even a bit of a description about what typical formations like head and shoulders or wedges and channels tend to do if they do it correctly, and what to look for if they don't perform as expected. So here we go. The E-mini got overbought. It made new historic highs by a small amount for a day or two. Now we are seeing it close yesterday below the previous historic highs, which were back in November. That was on December 6th. December. And through January and February, for the most part, these indexes, for the most part, got back up to twice or close to twice the same historical highs that were made a month or two earlier, developing a very significant historical resistance area that we broke out of to the downside in early March, had a sharp break, came back up to test resistance, and another huge break, we all know why, and then had a bullish engulfing on the E-mini, almost at the very bottom, and here we find ourselves right back up to those historical levels and a little bit higher, but overbought conditions have started to push the market back down, which is fine. I expected it. It happened a little later than I wanted, but yesterday was a pretty good down day. Listen to my tape yesterday. Now, at the moment, we are very, very slightly higher, a fraction of a point, a half, maybe less, and it's a doji, so this doesn't mean too much to me one way or the other. I do like the fact that yesterday's close was below the lows of the previous 2 days, and it made a new low, of course, below the lows of the previous 2 days as well, obviously. I think we're on the way down. It really depends a lot on how we handle the price levels we're at right now. These kind of statements I'm making are relative to the other indexes because they are in a similar circumstance in general. So we have to either go sideways a little bit, not much, day or two, or start to break down, and I want another 5 or 10 point, 15 point down day. Big down day, break support convincingly, and drop off a chunk. That's exactly what I think is going to happen. If that does not happen, and we stay here and start to break the highs of yesterday on a closing basis in particular, then we are looking at a market that made new historic highs, came back to a little bit of support, and, well, quite a bit of support, and then went right back up in a new high ground again, which is typical for a long-term bull market. And it would be very bullish. But I'm not expecting that. But I know what to look for. Look at the 1 minute chart on the E-mini, starting to show some weakness. We bounced, couldn't quite make new highs for the day. Very quickly, sharply, got very overbought on the 1 minute. And almost exactly the same as the last time we were up there when we topped out for a couple of hours. So breaking below 60, 62.62 should start it to break below the low of the day and then break below yesterday's low and so on. Spider gapped up on Friday. I mentioned this as a possible upside exhaustion gap. So far, so good with that. Came down sharply, closed the gap on Monday's market. Still overbought conditions and is going basically sideways this morning. A little higher, a little lower. 1 minute chart. Not much here. Okay, what about the QQQ? Very much like the S&P, gapped up on Friday, upside exhaustion gap, I think, new historic high ground by a fairly large amount, and it actually has to come back a little bit of a decent break in the first place, 541.5, to test the old historical highs, and that's the same thing that I think is going to happen on the other indexes, but to see this has a ways to go to get back to its old historical high supports. Some of the other indexes, E-mini, SPY, are very close already or there at the moment. So if everything starts to break down, those other symbols are going to look a lot more bearish a lot more quickly, while the Qs may end up bottoming out at old historical highs. And that would be 540, 70-ish. But if that doesn't hold, everything keeps on coming down. Next. Not too much to talk about here. There's that gap. Slipped off. Kind of held at a fairly obvious level for support. So we need to break yesterday's lows and start to slide again. The most important ones for the QQQ are going to be the price levels of 544.5 and just a little tiny bit above that 544.60, because then you'll be making new lows for about a week and a half. Next chart, overbought, coming back to historical highs now for the NASDAQ futures that didn't get up as much as quickly as the QQQ. But Doji basically unchanged, up just very slight amount. At the moment, not doing too much. You know what I mean here. You know what I'm going to say. Getting below 22,840 is going to look like it's going to break the low of the day, which is 22,807-ish. And then the low of yesterday, 22,779-ish. That's what I'm looking for. Next, we did have a bearish engulfing outside down day red ER sell signal yesterday in the YM. Officially, it is the only one that's given me a sell signal and the indexes. That's a little disappointing. I would have liked to have seen them, of course, across the board, which rarely happens. So don't, keep looking for that. But we got one. Today's slight bounce is feeble. We're lower on the day at the moment. Like the other indexes are very slightly higher. The only one that's net lower is the YM. If it starts breaking below yesterday's lows, it'll probably come off a chunk more. I need to be closing below yesterday's lows and a chunk lower just in order to come down to support, which is at 43,466. This index never came close to making new historic highs. And it did top out, not at a particularly important spot that I would have picked in advance. I would have said something more like up there, and of course the historical high area. Nevertheless, overbought conditions, bearish engulfing, on your way down as far as I'm concerned. Total fail-safe is a tick above the high of yesterday if you don't lower your stops sooner, quicker, excuse me, which my automated trading system, ER Signals, does. So we're looking at the day trade yesterday with the bearish engulfing. Got short right there at that point in time in price. The trailing stop started where it should and drops very fast. Within about 15, 20 minutes, it's locking in a small profit. Did not drop off until the trade was offset because it's the scalp trade just before the close. And the green downward trending line, dotted line, is the trade line. showing you where the trade was put on and where we got out. Nice profit. Good trade. Trailing stop did its job, etc. It did start to lock in a profit pretty quickly. Now we're going sideways at the moment. As you can see, not too far away from having some more sell kind of situations. You know, new lows for several hours, new lows for a day, new lows for a few days, etc. Okay, RTY, Russell, got up to the top of a major historical resistance area at around 2252, managed to close above it on one day last Friday, but yesterday dropped way back into the trading range, and this morning, although it's up a bit, it's not even above yesterday's high. The high of the day touched the top of the resistance level. I think it's about to roll over and do the same thing the other indexes are going to do, in my opinion. I think, crossing my fingers, start to make new lows for multiple days. Next, 5-minute chart. It's a little stronger. It's managed to make some minor new highs here in the last hour or two than the other indexes. Again, the Dow is the weakest of the group, and the Russell at the moment is the strongest. Bonds broke the major bull trend line a couple of days ago and has done nothing but sideways to lower since. Yesterday and today, pretty significant down days. Now we're back to the same levels we were about a month or so ago. Yeah, about that. And 3 to 4 weeks ago. Nothing terribly bearish about this. I think it's a technical correction in a longer-term uptrend. I am still looking for a whopping large long-term double bottom to develop, and that would be the lows back in January of this year and the lows that were made also in May. Got a great sell signal in the high there. That was okay. That was very nice. Green on the exact low day. Too bad we didn't have one back here. We're not oversold yet, but looky here. We're getting fairly close to 30. So if you start dropping to 25 or lower, these candlestick bars will go from white to yellow because you're oversold. And then I'll be looking for my green buy signals like this one that didn't, yeah, it worked, but it didn't work all that well. It took a long time for it to finally start to make some money. This one did not work except for one day. So it did work for a day. Let's see what we end up with. So I'm looking for maybe a dip down to about 11, a little below 112. 10-year notes, the same story overall. Got overbought. Couldn't hold a support, although it tried for 3 or 4 days. Then last week, start to drop into the support area. Test the bottom of it the next day. Stabilized. And then yesterday, Monday, we dropped below the support and follow through today. I think we could come down to maybe a little below 110. Yeah, that'd be about right. Slightly below 110, but that's the most. This could bottom out higher than that. We're not that close to oversold. Bonds were at 30. Here we're at 33, 33. Not too much different. So maybe another day or two down and get oversold and then have a reversal back up. I'm still looking for a long-term bottom in interest rate futures. In the case of the 10-year notes, the bullish engulfing green, which was, let me see, on October 23rd of 23, lines up fairly nicely with the lows in January of this year for a very wide, broad double bottom potential and a very, very, very big upside objective that we don't need to talk about right now because they're nowhere near even breaking out of the double bottom, assuming it works. So there's a lot of time here to be going sideways-ish, but the sooner it makes highs above 112.5, the better. But I think we're still going to go down for another couple of days and then start to turn around. Okay, we got crude and the other energies. Bearish engulfing a whopper. We're slightly recovering from that in the last couple of weeks, but not much. And I think all of a sudden this is going to nosedive again. But I did mention yesterday the bullish engulfing, and it did stay a bullish engulfing. So I'm not surprised it's going up a little bit more today, which is what I talked about yesterday. I don't think it's going to go up much. My first expected top and maybe the high of the rally, 69.70-ish. Next, and then down. We've got a head and shoulder top in progress in natural gas. It made a new low for the move down yesterday. Today, we've got a doji with a current quote that's a little bit lower on the day. Looks like a probable new low close for the trend down, but you also want to see lower lows, which we should very soon, I think this week. So the next support level, and we could get oversold at the same time, would be a 3.2 down to about 3.1. And we're fairly close to oversold at 32. So if it drops down into the support area fairly quickly by the end of the week, then we could get oversold at the same time and have a nice bounce. But remember, we broke the neckline. Let me get my mouse to work. It's getting a little bit stuck here. Okay, good. We broke the neckline. The minimum downside objective is 1.1 or very close to 1. And that's where I think we're going. It's a lot lower. So I've detailed this multiple shoulder, head and shoulder top with a head and shoulder top at the top of the head and shoulder top. Literally, some of these lines have changed slightly since the rollover of the contract month. So I should be making minor adjustments here to my support and resistance areas. And it's a tiny bit higher than what I just said, but you get the message. We need to get a little bit below yesterday's lows to test support. Okay, but the trend is down, and I am looking for almost 1. Heating oil, gigantic reversal, just like crude oil, and a bounce back a little bit more aggressive than crude. There's your crude. So somewhere in here, I can't come up with a great number at the moment. We should stop rallying and start to turn right back down again. Exactly. Next. We have an outside down day in progress in gold, and then I'll talk silver, platinum, copper. Looks like this is going to cause the market to come down some more in the next several days. Bearish engulfing. It is not an ER sell signal because we weren't overbought. I do look for the support level at 32.37 to be tested and maybe broken. If we break it, then we've got an old bear trend line to consider as far as possible support on the way down, which depends on the day we get there, assuming we do, at 32.48 or whatever, because it slants down. This is not particularly relative anymore, so I'm going to erase it. So you got a horizontal support, then you got an old trend line, and of course, you've got old lows right on May 15th, and that correlates with the trend line pretty good in about 3 or 4 days. So that's an interesting combination. Next, outside down day yesterday, bearish engulfing, implies we're supposed to come down more today. We are down today more, but we're not below yesterday's low, which I think is going to happen next, soon, this week, maybe today or tomorrow. I tested a little bit of support at 36.12, then some support at around 35.5, and I'll put a little support line in there, because that does look particularly interesting. And if that's broken on a closing basis, then we can come all the way back down, probably at least to 34.27. Next, platinum has a doji, and it's kind of stuck here for 3 out of the last 4 days at the same price on a closing basis, with only Friday being up a little bit. So Thursday, the same as we are right now. Monday, same. Today, we're just a tiny bit higher, almost the same. No higher high, no lower low, but yesterday was the bearish engulfing. So in my mind, it's just a matter of waiting a little bit, and all of a sudden we're going to be below yesterday's lows. And then I'd be looking for 12.99, let's call it 13 flat, and then down below that, probably 12.45. Next chart. This looks like bad data, but no, it doesn't. No, it doesn't. Something happened with copper. I was looking at this just an hour or so ago. We didn't have a sharp, huge rally. Let me go to a 1-minute chart and show you real quick. Make sure this is good. Oh, it's good. Wow. All right. 9:57 California time, something happened to copper. It shot up like a rocket. Huge. Going back to my daily. Whopping move. This is recalculating the strategy, so the red-green bodies will go back to my colors I like, which is mostly white, except overbought, oversold, which could be yellow, and occasionally signals. I've got a circle around them. This green body in my mouse is now occupied, so there we go. On April 9th was a buy signal. Great. So I really don't care too much about sideways yellow. I meant white. This is now overbought rather spectacularly today in the last 10 minutes because of the size of the rally. Okay, here's the important thing. We just blew through important tops for a long period of time. If the market can stay above these old highs, where my first resistance until 15 minutes ago was at, then something could develop much more bullish over time if it stays above the old highs on a close. But if it closes below 5.48, it just might collapse back right back down to where it was, even going lower. Think of all the people who were short and got stopped out in the last 20 minutes, 15, 10 minutes. And people that chased this market up in order to make it go up as much. It wasn't just buy stops being hit. It was new longs, of course. And if it doesn't close real strong, somebody's got a bad trade going from the high or close to it. Something to watch very closely. Copper, this is a very interesting one. Okay, we got soybeans, oil, meal, corn, wheat, and then the stocks. Beans are not doing too good, but today's low is exactly the same as 4 days ago, which is higher by 3 ticks than my bullish engulfing bottom of the market buy signal on June 27th. So far, that is the low day by only 3 ticks. I want it to turn around. I want it to close higher. I want it to come up and close the gap, and I want it to get above 1058.5, and in fact, break out above 1075 or 6. That's going to be very bullish if we can close above 1076. Meanwhile, if I were to be a buyer right around here, I'd have my stops about a penny or two below today's lows. Not that big a risk. Fairly reasonable. Looks like a nickel, 7, 8, 9 cents or something. Soybean oil did break out of a head and shoulder bottom on an upside breakaway gap. Classic on June 16th. Got overbought. Had a sell signal, turns out to be the high day so far. Perfect. Dropped off sharply, tried to close the breakaway gap, closed about half of it, maybe about half. Did not violate the neckline, that's good. Came very close, which is okay. There's no problem with that. Started to get back strong again. Tried to make a new high, couldn't do it. Got overbought on Friday and dribbled back a little bit yesterday, and today's a doji. Basically unchanged, down a tick. I don't want it to get below last week's low of 51.50. That would put me in a difficult situation. The trend, the neckline still has to hold, regardless of anything else. That's the key. We should not go down very much. We should start to make higher highs and a new high for the whole trend up relatively soon. I'm going to say within a few days to maybe a week or two. And that's the way it should develop if the head and shoulder is going to work in a relatively normal manner. Soybean meal just can't get its rear end in gear. It made a new low for the trend today, killing my buy signal just a few days ago. Didn't work, although it did work for 1 day. And that did give you some scalping opportunity profits and overnight trade profit potential, which ER1 scalp and ER1 overnight could have, should have, probably did do very well. Now, the buy signal is now negated, come and gone. We've made a lower low, but we're oversold again. it wouldn't surprise me if we get another green bullish engulfing. Hopefully it'll work great. I can't get bearish when I'm oversold and still trading around previous bottoms. I think we're about to turn up, maybe today's low, but I don't see enough evidence to really be very emphatic about that. Corn, new lows, trend is down. Looks like it's going to have a close below all previous lows. It's about there right now. Anything lower than this on a closing basis would certainly qualify. We're lower than last August lows. I really can't come up with anything particularly bullish about corn. Yes, we've got a gap to go up and close at 417 from 413 to 17. There's a lot of resistance starting at 422 or 3. I could only start to get bullish if this thing starts to close really above 440. Not looking good. I'm bearish. Can't help it. Got to go with the flow. Trend is your friend. And wheat seems to be on the verge of doing what corn has just done. We can't hold the rallies. They get to resistance, get extremely close to overbought also, and fail, drop all the way down, making some new lows, almost new lows to the whole trend, bounced for a couple of days, and here we are again, fairly close to the previous lows in the last couple of weeks. And that's very close to the lowest low for a long number of months. As a matter of fact, that's years. Remember, wheat was extremely high because of the beginning of the war, early March of 22. 3 years ago plus. So this is the lowest levels for wheat in, gosh, 5, 6, 7 years maybe. I just don't have the data going earlier than January of 20. So this is definitely 5.5 years. And because it's way up there, probably multiple years before that. I don't see the price of my Wheaties cereal getting cheaper. Next, a rally is starting to close the gap in Shell, S-H-E-L, stock. So I'm going to get up and close the gap. Whoopee, 71.74. Whoopee, what does that mean? Not much. The trend is up. We got a buy signal at the very bottom, April 9th. So far, we've got a sell signal at the very high of the rally. And it was right around where it topped out before. I can't come to a conclusion other than gaps are almost always closed, and I'm looking for a rally up to 71.77-ish, or 71.74, whatever. That low is exactly, just so we know, 71.72. But closing above 72.41, that would probably turn me friendly, because after all, since the early part of April, May, June, July, last 3 months and change, you've had an uptrend, which is good. But at, the major resistance and the bearish engulfing at the high of the rally causes me to look for lower levels at the same time. So I'm not sure about this. So shut the heck up. Next, we have bearish engulfing on Apple yesterday. We are currently trading just a tiny bit higher, pennies, on a $210 stock, so it's basically unchanged. I have to think that this bearish engulfing yesterday is going to cause the market to come down to probably a little under 200. If we break below and close below 193, let's call it, 183 will do. Then I'd be looking for a move down to probably about 170. And that's exactly what I'm looking for. The old saying is, the way Apple goes, the market goes. So you've heard me talk bearish about the market. Indexes. Apple all of a sudden tends to agree. Next chart, we got Tesla, gap down a lot yesterday, coming back up to about the middle of the gap. Should come back up to approximately 312.60 to close the gap. Anything above that starts to make it look a little bit more bullish, but we're between a rock and a hard spot. We have a buy signal on June 9th that worked nicely. Not super good, but pretty nice, but it worked. Pretty damn good support starting at exactly what yesterday's bottom was, 290 and a hair under. So I'm looking for a rally to close the gap. That's about it. Next, we've got NVIDIA. Overbought conditions last several days. New high in price, but not in the indicator divergence. Two gaps to come down and close. So I think we're going to start going down. Maybe we did on Friday with overbought conditions to start sliding yesterday to a level of about 144 to close one of these two gaps, the lower of the two gaps. And that does start to get into some good support. And let's go look at the E-mini. So I see it is coming down a little bit here. Let's look at the 1 minute chart. Okay, it's getting closer. But remember, getting down below 62.62 is going to raise one eyebrow bearish. Making a new low for the day is going to do a lot more. And getting below, closing below yesterday's low over here is going to do a lot. Could happen today. We're down about a half a point at the moment. You guys have a great day. Profitable trading to you. And I will be starting to record these recordings, market analysis, between around 1 and 2 o'clock starting next Monday. Otherwise, the rest of this week is the same. Have a great day and profitable trading to you.